Market Club with your 1 p.m. update for Tuesday, the 12th of July. Okay, the word of the day, contagion. Now I wanted to look this up in the dictionary just to make sure I had the right idea of what it was. And this is what it said. The ready transmission or spread as of an idea or emotion from person to person. The example it gave, a contagion of fear. As we reported yesterday, these markets are very, very choppy and very emotional. It's a battle between the bulls and the bears. Events outside the control of the United States, in Europe, and the contagion problems in Italy and Greece are all making this one financial mess. Another disastrous trade deficit came out today, $50.2 billion trade deficit. Not good news for the USA. The debt ceiling talks continue between the Democrats and the Republicans with no apparent end in sight. Perhaps they should look up in the dictionary the word contagion, get a sense of what it means and how it can spiral so quickly out of control and take on a life of its own. What's happening in Europe could very easily happen here in the U.S. if we don't start addressing this problem. This is a real crisis, and Congress is treating it just like another minor problem we have to solve. This is a serious problem, and one that has major implications for the U.S. and its standing in the world. Just imagine if the dollar lost its reserve currency status. That would be catastrophic for this country and everybody who lives here. It would not be a pretty picture. Okay, let's go to the financial markets as they tell the truth, what's really unfolding in the financial world. So let's see how we can protect your money and make it grow with our 1 p.m. update. Okay, we're looking at the S&P 500. We've looked at this market and we've been pretty much spot on in terms of our accuracy. And let me explain to you why I say that. Because we had the move, we were looking for this market. Once it got up to the top of the Contagion trade channel, we talked about this 50-day cycle, which is right here, and how it's going to dip down like this. Now look at this particularly, and here too. You had the sharp move down, a little move up like that, sharp move down, a little move up, and then a continued move down. I think what we're going to see here after this strong down day yesterday, meaning Monday, this little tight kind of doji line is breaking right now. I think we could see just a little bit more like this. Then I think we'll see the market go down again and test the lows at around the 1260 level. And this is definitely without question. We talked about this every day. This is the line in the sand, the 1250 level on the S&P 500. If I'm correct, this could be one of the best times ever to make money. So watch on this show every day because we're going to give you the trigger points you want to have to make money. So let's see how this works out. Let's take everything off the screen, but I really am convincing myself, and the market's convincing me even more as it's basically working out the way we expected it to work out. So let's clear everything off the screen. Go to our next market, which is going to be silver. Silver right away, I want to just share this with you because we've been talking about it. We talked about this energy base that we're looking at. Here's a 200-day moving average, which you see right here. The market's over that 200-day moving average. It got very close to it today. I would say the risk here is probably 35.60. You can wait just a couple of cents on this, and I think we'll see this market go higher because clearly once we break, we may still go sideways, but once we break out, and our trade triangles are telling us that the longer-term trend's up on our monthly, the weekly is positive, and the daily right now is negative. So basically, we are seeing an 85 reading, still a very positive sign. In fact, what you want to do with this is to look at our audio summary, which is talking charts. Nobody else has this, so just click here, and you'll hear my voice or someone else's voice telling you what it thinks of this market.
The 85 reading on this chart indicates that a strong upward trend is in place. The current weakness will be short-lived in our opinion, and we expect that the upward trend will once again resume very soon.
Okay, there you have it. And we do this on every single market, 250,000 symbols throughout the day. It's changing constantly. The markets change, our recordings change. It's a valuable thing to have with you and just to get a confirmation about what we're thinking and how it fits into your thinking as well. So let's clear everything off the screen and go to our next market. Just click here, the little triangles you see backwards and forwards. And this is gold. Gold is still mixed. We talked about this before. We've got the monthlies up, the weeklies down, giving a sort of a neutral position right now. The daily's up, but we're still neutral on this market. Really want to see this market break out over these highs. Once we do that, then I think we're on our way. The market's higher today. It's not acting badly at all. I'm convinced it's going to go higher simply because the silver market, which was 8% higher last week, is going to drag the market higher probably. So watch this market very carefully for a breakout over these highs, because this is, again, this is the energy level, the energy fields we call them, which is right here. This is a big energy field that's building up, and it's going to be strong enough to take this market up to be a strong end of Q3. So let's see how this market plays out, but I like the way it's looking so far. Let me take everything off the screen again, and we'll go to our next market. And our next market is the crude oil. Now remember, yesterday we said about the Fibonacci retracement. We thought we'd get down to 93.30. We got down to, actually, we got down to right around 93. I think 57 was the 55 was the low. Very close. The market came back like gangbusters, and it's closing very well. This market looks as though it wants to turn around. It's beginning to get into that mode where it's sort of, hold on, let me just take that off the screen, and let me just put my drawing thing on here. So let me go back here and turn that off and get my drawing illustrator on. And it looks to me like we're trying to make that little turn. Again, this pullback is going to be very important to see. We've had the 62% retracement on the Fibonacci, in my opinion. It's a strong close today. I would say, let's see how this market closes for the week on Friday, because we've already had the positive engulfing line 2 weeks ago. It was confirmed last week, and it should close about, I think, flat or neutral for the week, but still it looks as though it's trying to make this turn. So watch it very carefully, but our triangles are all down: monthly negative, weekly negative, and daily negative. Let's see how this works out. So stay tuned and watch this very closely. I think it could be very, very interesting, and I'm sort of getting excited about this market. So let's see how it works out. Next market is going to be the dollar index. It's kind of an interesting thing today in the dollar index. It just pushed up enough to give our 76.61, the market's 75.93, a long-term indication is turned around. I'm not so sure, but I'm certainly not going to argue with the trade triangles, because two things. One is you've got the monthly trade triangles in a positive mode, the weekly in a positive, the daily in a positive, plus 90. Very good score to have for a trend. So today's action was built on the Contagion in Italy. The euro really took a hit. But you see, the other thing I want you to look at very closely here, and that's this line right here. And draw it right in here. And that's a 200-day moving average. So that's what you want to look at. If we go over that, then I think we've got something. Right now, I still think we're going to be in a trading range, and we'll see how this works out. But generally speaking, the dollar was a refuge. The euro is not looking good at all. We'll be addressing that in our show tomorrow, and hopefully you can join us for that show. And let me go to the screen again, take everything off, clear this off, go to our next market, which is going to be the CRB index, the Reuters Jefferies CRB index. Again, we've talked about this market. We've got all of our triangles are red. However, it looks as though it's trying to make a turn. It would look, when you first looked at this market, you would say, wow, it broke below this level. That's a 200-day moving average. It's back over there. And again, if we get some more momentum going here, and certainly if we can see this market break out over, let's say, the I think it's 352, 354 level, then I think we've got something going on the upside. But hey, let's see how things work out. But again, we're doing a show tomorrow, Wednesday at 5 o'clock, and I want you to call in, because here's the number you want to call. I want you to call in with leave a message for us, and the number to call is area code 410 867 2100, and you want extension 429. Call in the show. You have a chance to win a free membership to MarketClub. You can call in and tell us how you use MarketClub, how you trade the market, how you look at the market, any questions on the market, anything to do with the market and money. We'll be answering those questions on our show tomorrow at 5 p.m. So please pick up the phone, give us a call, and see how you can be on our show tomorrow and have a chance to win a 1-year membership to MarketClub. Hey, this is Adam Hewison. Thanks for stopping by. Every success in the markets. I'll see you tomorrow at 1 o'clock and again at 5 o'clock when we do our show.